All right, hello traders. It is Friday, September 27th, 2024, end of the week, almost end of the month. We got one more trading day left in this month. Been a good month for us trading. Let's get to it. We're going to cover what the markets have done. We're going to cover some commodities and some of the futures that we're looking at. We're going to cover how our trades are doing. We're going to cover what positions we're in. We're going to cover a few new tweaks to what we're doing. Nothing major, but I want to share with you at least some tweaks on not only hedges, but some of the trades that we're doing and making sure that we're really sticking true to our trade plan, which is, of course, the key to success, I believe, in trading is having a plan, following your plan. Okay? You can't think of every eventuality out there, but if you have a plan, you're going to be in really, really good shape. And we didn't follow our plan quite to a T here. We're going to talk about that on the Lazy Trader account, and I'm going to show you what we did to rectify that. But I think we're in really, really great shape heading into next week and into the last 3 months of the year. So just talking about the week itself, in the broader markets here, stocks, pretty mixed on the week overall. We saw some new economic data. We saw some earnings. We're seeing that inflation is cooling a bit. So we got some more data out today. So inflation seems to be cooling a bit. However, there's still some concerns over the economic growth and what's going on. And obviously, we're getting some serious fluctuation in commodity prices, which could be affecting things as well. So overall, today, we closed on the S&P at 5738, down basically 0.1%. The Dow down 0.3%, and the NASDAQ today down 0.4%, actually 0.5% today overall. So what sectors did what this week? Really, if you take a look at the tech sector outperforming overall on the week, really storage, AI driven. You saw Micron, this was the big one too. So Micron Technologies up 18% for the week. Fantastic moves on Micron. So that's really driving things. Intel also up almost 10% due to some acquisition speculation out there. In the energy sector, we were down for the week. In fact, that's one of our, I'm taking a quick look here. That's one of our trades in the Lazy Trader. We are in XLE. Down for the week, but up today nicely. But oil prices fell another about 3% on the week today. I think we ended up around 68, 60 or so a barrel. So a little weaker demand, remains a concern for oil, and that's really putting the pressure on there. We're not seeing, necessarily cuts, but there's plenty of supply. Everybody's cranking out oil, which drill, baby, drill, and it's everywhere, not just in the U.S., but everybody's drilling, everybody's producing oil, and demand seems to be softening a bit, pushing those oil prices down. However, today we had a nice rebound in oil, up 1.5% almost on the day. Financial stocks today, really this whole week they've been mixed. Banks just continuing to lag a bit. And then we're just looking at some of that M&A speculation with Intel, Qualcomm, those types of things. But we are in JP Morgan in the Lazy Trader account with a leap put, and that leap put was up nicely today. So we're in that banking sector. So we're in finance, we're in energy. Energy has been a little weak, but we are writing covered calls, so we're generating income while we wait for energy to rebound. And of course, we're taking advantage of the tech sector and others. Key stocks this week, we talked about it. Micron up 18%. Strong AI-driven demand on an earnings beat. You got Intel on the potential Qualcomm acquisition of Intel. You had Wynn Resorts that cranked up because of Chinese stimulus plans. And that, I think, is really the underlying key for the week. I don't hear it talked about enough out there, but the Chinese stimulus plan that is out there is really starting to affect, I think, a lot of different sectors and underlines. Certainly those Chinese stocks. If you look at Baba and Baidu and JD, great weeks for those this week. And then SMCI Super Micro, that fell about 8% this week. That's still sketchy, and I am staying 1 million miles away from that stock. Didn't have great guidance, so weaker than expected guidance, halted. I'm concerned about accounting issues there. Then gold this week. Let's take a look at the charts real quick, so I don't just sit here and talk to you online. Let's take a look at where things are. So let me pull that up for you. Let's share our screen. And let's take a look at what's going on out here. So gold as a whole, nice week this week. So a big up week, setting new all-time highs this week, up 1.3% today, or on the week, I believe. Okay, weaker inflation and treasury yields weakening. So as yields fall, okay, and you've got some weaker inflation data out there, gold is going to continue to rise on yields dropping. It's an opportunity to diversify. Now, copper also ended the week. Taking a look at copper, which is one of my favorite trades, copper ended the week massively higher. So copper had a huge week this week, really good increase. Again, Chinese stimulus, okay, is going to push the need for copper, because copper is what we're using in semiconductors and the technology. So again, that China stimulus plan, not just affecting individual stocks, also affecting copper and some of the commodities. So you're going to see more Chinese demand for copper, and that's going to keep buoying copper higher. Huge week this week. We had some trades on in that. Don't have anything on right now, but I think copper is a good opportunity out there. And then lastly, on the commodities side, we'll take a quick look at the Aussie dollar. This thing's been a difficult trade for us because we do have a strangle in it. And we're pushing higher to new recent highs. Oops, I really didn't mean to move that up, because we're not at highs. I'm going to try to keep this thing a little more balanced if I can. So let me move this thing around here. We're watching this level that we broke through. It's not a previous high or anything like that. We're not to that high from the last 2 years on the Aussie dollar, but really marking its way higher. This morning, briefly touching, what on the day, almost 0.694, but the Australian dollar gaining, again, benefiting from increased China commodity demand. Chinese stimulus, buy copper, and it's going to buoy the Aussie dollar out there. So we're really seeing the effects of this China stimulus affecting us. We had a stop order in, did not get filled on it, and then it settled back down a bit on the day. But I don't think we're out of the woods on the Aussie dollar. I'm still thinking we're going to get stopped out on that, but we'll wait to see if that happens. And then bonds overall, bond prices rose here. So if we take a quick look at the 30-year, okay, down on the week, but nicely up today. Good bounce today off of the doji candle yesterday in this uptrend line. Still very bullish bonds. I like the fact that we've had a nice pullback and then a nice bounce today. And if we zoom in a little bit more here on ZN, which is going to give you that 10-year note, okay, overall on the week, I believe we were slightly higher on the week, just fractionally, but a little bit higher. And then we were definitely higher today as well. So because the 10-year yield is falling, you're seeing 10-year bonds increase. And bond prices are rising, again, weaker than expected inflation data, and then some increased demand for treasuries as a hedge against some of this market volatility that many might be expecting. So anyway, we've got some key economic data that came out this week. You had jobless claims declined to 218,000. You had slower core PCE inflation, which is helping reduce some of those concerns about interest rate hikes, okay, and keeping us in the cutting mode, which is going to be good for bonds. We're going to start getting some earnings next week, so we'll keep a look on that and see what happens overall on bonds. But overall on the market this week, nice up week. The S&P mini, the futures here had a good week, off a little bit on the session today, but our account doing really well. We need a little bit of this breather, so we'll see if we get some of that going. So there's where we are on futures, and some of the key stocks that we saw news coming out this week. Let's talk about the accounts. So let me jump into the accounts a bit with you. And let's take a look at the main Income Navigator trading account. We ended the week with our delta at 181, so very flat delta, perfect. Loved where we are on that. We ended with really nice theta today, 1135 on theta. We did not add any new trades. Net lick sitting at 352, 511, so a nice up day today. I think yesterday's numbers cannot be a correct number. Let me double check that number from yesterday, but I'm pretty sure that that was not the number from yesterday. 26, let's take a look. 349,908. Yeah, I don't know that I believe that number. There's no way we were down that much yesterday. Anyway, today we ended at 352. I'm looking at it right now. So 352, 511 is the final net lick for the week. So overall, kind of just a flat week for us, but we did manage to generate another $3,500 in realized gains. Let's cover quickly what those gains were in. We added $651 more today. Let's take a look. So today we closed our S-vol position, and I like S-vol. I think it's a great opportunity to generate income, but it's not really something that fits in with our futures trading and trading options on futures in the Income Navigator account. It is something in the Lazy Trader account that we do have an S-vol position, and we'll continue to grow that position. So I removed it from here. It was a small $100 winner today, but I did remove that. We also did close an RTY, so Russell put credit spread for another $543. And then we closed one of our regenerating hedge flies. We closed the short strikes yesterday for $2,200. Now it's going to show up, okay, as a as a realized gain, which it should. However, we did buy and use some of those funds to buy more long puts, and we helped cover those long puts and this sell with selling some more short puts to cover that. Now this 2,200, it will get washed out when some of the old long puts fall off and expire worthless. So we'll take technically a loss or a realized loss on those when that happens. So wasn't really from anything great in the trading side. It's just allowing our volatility hedge that we're using. And we made some significant tweaks to that today. We did do a roll yesterday on it. We added more long puts, used some short puts to buy those long puts. We've now got 20 longs, 10 shorts on that particular hedge. So I like where we are. We've tweaked the strategy a bit more. I think it was a little unclear and a little maybe not the best setup for it. So we're continuing to evolve our vol hedge. Again, love the 112 trades. They have been a great trade for us for years and years and years, generating a ton of gains for us. So we're not going to just take the bear trap 1-1x trades and chuck them in the garbage like many people have done here. We're going to take a trade that we know works fantastic. But in order to campaign this style trade, if you're going to have multiple ES 112 trades on, you have to have two things. Number one, you have to hedge it. Okay, hedge what needs to be hedged. I've always said you've got to have a delta hedge on, which we did have on August 5th. We just did not have enough hedge for the extra trades that we had. Okay, but the little piece that we found we were missing was also a volatility hedge. Okay, And I think we've come up with a really great way to do that. It looks good so far in the risk analysis that we're doing. And I've got two of these. We started with the butterfly, regenerating butterfly hedge. I know a long word for that, but technically we are just buying many out of the money puts, and we're paying for them by selling some a little higher delta, higher DTE short puts. And then we're taking profits on those short puts and using those profits to buy even more long puts and repeating that cycle over and over. And what that's doing, it's giving us more and more and more of these long puts. And that's creating a nice put hedge wall, which is perfect for not only a hedge, but perfect for volatility. So I think we've solved the volatility problem to a good extent. We'll see how it plays out. You won't know until you get a volatility event, but I really like the way we're set up. So I'm extraordinarily happy with the account. And you can see that the delta here has been fantastic. And you can also see that our Vega has been pretty good. We have really been in that 4-to-1, 5-to-1 Vega ratio, which is about half of where we used to be. So we're really making some great improvements in what we're doing. We've pulled a lot of the volatility concerns out. We've got a Vega hedge running right now, and we've got a new FB112, which is one of the trades that I've been running for many years here. The FB112, which is the fat bastard or fat boy or whatever you want to call it. If you want to be politically correct, that is a big, fat, wide put debit spread paid for by naked puts. And again, having too many of those can be a problem if volatility spikes. But what we have done is we have calendarized it and diagonalized it. So maybe it's more of a calendar than a diagonal. I don't really know how you want to phrase it, but we've moved those naked puts into a much more front month expiration cycle and left that put debit spread. And we've also widened the put debit spread. So what's going to happen there is the naked puts should fall off within 30 to 45 days or so, hopefully, based upon what we've got set up. And we're going to be left with this 500 wide put debit spread for 9+ months. And we can kind of recycling these. So we're adding some great hedges that really aren't costing us a whole lot here. And as they mature and head in there, you're going to see us dropping delta a bit. You're going to see us dropping Vega quite a bit. And you're going to see us with a really good, solid portfolio. And we're going to move back from the 111s back to the 112s as we get these tranches on. So overall, really good stuff. Great week this week. In the last 3 weeks alone, we have put in about almost $16,000 in 3 weeks alone on the Income Navigator. So working perfectly. We're back to where we were. We've got great hedges. We've got volatility and delta hedges. We're back trading those, and we're adding extra income with a lot of these extra put credit spreads that we are doing because they take a little bit of buying power and they're allowing us to add more income. So we're going to be back and better than ever and cranking more income than we have in the past. So really, really looking forward to good stuff. If we take a look at the Lazy Trader account, Delta 617, because these are almost all long style trades. Our theta is at 276. Net lick is up a little bit today, 244, 507. We are just a few points away from new all-time highs. We didn't quite hit it, but our BP usage pretty much remained the same. We didn't close anything out today. Now, we took some losses this week, but these were all calculated losses, which obviously didn't affect the net lick since our net lick is actually up this week, and we took some realized losses out. Why did we do that? I'll give you a little bit of a sense here of what we did. Now, on the day yesterday, we actually closed out a MicroStrategy put poor man's covered call trade. Now, the net to that was $280, but we had already closed covered calls in MicroStrategy. So overall, we made like 15, 18% this month on MicroStrategy, and we still have trades working. But so that was a little bit of the gain on the 26th. But one of the things we took off was we took a loss in CleanSpark. Now, we took a loss because the underlying long calls, they had dropped about $4,200, but we also made almost $2,000 in the covered call portion of it over time. So we really, while we're booking the loss, we've been booking some gains on those covered calls. But I got rid of CleanSpark mainly because it doesn't really fit my trade profile. So when I'm looking at the Lazy Trader account, and maybe we can share that account with you. You guys have seen much of this, so I don't really have to get into it, but I want good quality companies. And while I think CleanSpark can be a good quality company out there, it doesn't really fit what we're doing. So I just got rid of it completely, not because it was a loss. That loss wasn't even, I think like 1% total when you add in all the covered calls from it. That loss didn't add up to a whole lot. I just wanted to clean the portfolio a bit. CleanSpark's been moving higher. It probably would be totally fine. I just don't want it in my account at this point in time. Here's what we're looking at in that Lazy Trader account. You can see most of these are all good, high quality names. That's what we want to own. We've got plenty of bill. Okay, we've got $183,000 worth of bill, which is just using cash, but not using our margin up, because this is a portfolio margin account. So I'm using 1% of that money is actually going towards our margin. We're in CRM with a shorter term trade. Okay, this was a put credit spread that we've got on, and the end phase is also a put credit spread. So 2 shorter trades, and then you've got Google as a leap. Okay, so you have Google as a leap, you got JPM as a leap, we got MicroStrategy as a leap, we got NVIDIA as a naked put, we've got Oxy as a jade lizard in here, we've got SPY leaps, okay, which are fantastic, and then we've also got TLT leaps in here as well. So you can see that, really this account, and we've got XLE as a poor man's covered call strategy, selling covered calls on. So again, the goal here in the Lazy Trader account is we really just focus on selling leaps, selling naked puts to generate income. If we get assigned on those, I'm okay selling covered calls, and other ways to generate income would be the poor man's covered call strategy in there. But I really want to keep focusing on quality stocks. The NVIDIAs of the world, the SPY, the Google, the JPMs of the world. Those are the stocks I want to make sure that we are trading in that account. And we're doing great with most of those trades. So that's what I want to keep everything in the Lazy Trader account. That's how that account works. We're not necessarily wheeling. I'm not selling short-term puts to get assigned so that I can wheel and sell covered calls. Technically, if any of my leaps get assigned, I will wheel them. If you remember the video I did on why I hate the wheel, which I absolutely hate the wheel the way 90% of traders do it, is they're buying high volatility names, selling puts, and if they get assigned, they're selling those high premium covered calls. But they're getting assigned on crappy stocks that have high premium. That's what I don't like. Okay, they're not really, you say, oh, I'm okay owning it. Well, you're okay owning these, crazy high profile, high risk names. Okay. No, you're not really. You're saying it because you think it's the hot name out there, and it's not. What the names that you should be in should be those big horses, the JP Morgans, the Apples, the Microsofts, the Googles, the NVIDIAs, and ETFs like SPY or TLT or XLE or any of those. You should be in those high quality names. I don't know if Palantir's in that tier yet. They're trying to get there. It's been that high premium name that people have been wheeling, okay, and they're making out okay on it. Is it a premium, high quality stock? The jury's out on that. Now, many people think it is, okay, I think it's a great company. Do I think there's more upside there? I certainly do. I don't know if I want to chase it at this point in time. Okay. But Bank of America is another good opportunity out there. Potentially Qualcomm, Lilly, uh, Eli Lilly. Those are names that I'm okay selling leaps in. Not these things like DraftKings and Coin and even that Clean Spark that I was in and stuff like that. It's just not the quality names that I want. Can you make money on the wheel doing it that way? You absolutely can. Can you lose money? You absolutely can, because you're in high vol names that have a lot of debt, don't have the cash flow, and if things turn south, they're going to get hit pretty doggone hard. So I want to be in these high quality names in the Lazy Trader account. Then in the main Income Navigator account, I told you that we got rid of, today the SVOL because it just didn't really fit in there. I've got TLT in there right now. I'm going to remove that as well. I want to stick with those futures and index options in there. I don't want to cross the streams and mix the strategies. That account had a good day today, up nicely overall. So we'll see if oil, it's really going to be predicated on, can oil and the Aussie dollar continue to either hold here or drift up slightly? China's hurting them. Okay, China's hurting us on those particular names. However, okay, I think we're in really great shape on our ES and our bond trade. I'm super positive on bonds. Our bond futures are up nicely there, and we've got more trades coming. So if this video was helpful to you, okay, click the like button down below. Help me out if you would. If you're not a subscriber, what are you waiting for? I'm giving you a lot of different trade ideas, a lot of different strategies. I'm sharing my journey with you so you can see what I'm doing, and maybe you can take some of that, good and bad. What are the mistakes I'm making so that you don't make them? What are the things that I'm doing that are working out really well so you can do those? And then make your own trade plan. Don't trade my plan. Okay, trade your own plan. Find out what you're comfortable doing. What's your risk tolerance? What are your goals? Put something together and put strategies together that hopefully make sense for you. All right. If you like this video, again, click the like button. If not, have a great weekend. Everybody, enjoy the weekend. Spend some time with family. Forget about the markets, and we'll see you Monday. Bye-bye.